Good morning, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago on Wednesday, November 27th. First off, I want to wish everyone a happy and safe Thanksgiving here tomorrow. Enjoy the holiday. And move right in here to the energy commentary. So oil prices here breaking on down. We're off right now about $1.43. We're trading around 92.25. Brent is also weaker, although we're only trading off there about 22 cents. We're down at around 110.68. So we are seeing that spread widen. If you're interested in learning how to play the WTI Brent spread, give me a call, shoot me an email. We can get into a little bit more detail on that, but there's a lot of opportunity there. Nat gas bucking the trend. We're up about 4 to 5 cents there. Complex is a bit unchanged right now, kind of quiet there ahead of the holiday trading. Now, let's take a look here. What's moving the price of oil here right now? Well, equities markets are really kind of quiet here right now, so I don't think that's having a lot of influence. I think the big thing is, and I kind of touched on this in my last post, is the deal that was brokered between the United Nations Security Council, the P5+1, and Iran there to basically make their nuclear program a little bit more transparent, for them to kind of divest a little bit of their nuclear ambitions, and in return, lifting sanctions, which is anticipated to put some oil in the market. Now we'll see, how that all transpires, but the reality of it is that that's going to take quite some time. For them to really look into that and see if they're following along with everything and how things are progressing. But the idea is that, here at least in the short term, is that we will see some additional oil starting to come on the market. Market's forward thinking. So that certainly, in my opinion, is a bit of a bearish signal here. Now, couple that with, we just had EIA data that came out today. This is the 10th weekly consecutive build in the stockpiles. Now, API was reporting a much more bearish number last night, but we came in with a build a little bit bigger still than what traders were anticipating. Traders were looking for maybe a build of about 500,000 barrels. That build came in at around 2.9 million barrels. So now at that time, though, when that report was released, oil prices were already trading in this range. So I don't think that's had much of an impact on helping push prices down too much further where they're at right now. But I think the big thing when you start looking at the technical side of the market is this. And I touched on this in Monday's post as well as some previous posts. And I also touched in this in our bi-monthly newsletter there, the eView, where I wrote an article on the oil market yesterday, and I was talking about the support level that we've seen in this market here. As this market's been consolidating down around 93, seemed to be some pretty decent support. Now, the other day we went to a low there at 93.08. Obviously, we took that level out here last night into this trading range. And so when you look at the consolidation that we've seen in that January oil on the charts, in my opinion, we saw there's a lot of sell stops that were down below the market. And as this thing broke down and started to head lower, obviously triggering a lot of sell stops, knocking a lot of the weak longs out of the market. I mentioned that in Monday's post as well as yesterday's eView. Long should be cautious in case we saw something, and here we are. It's happening here today. So we're seeing a little bit of a washout there in the market. So, where price is going to head from here? Well, I think there's still some additional weakness in store in the market. Short-term technicals are still a little bit in the oversold area, but there's no doubt in my mind that the bears have firm control of this market. We could be heading down to around $90.50 to $90 a barrel. So we might see that market kind of come back up, look to retest around that 93 area. So got some ideas and some strategies on how you could take advantage of this. So feel free to give me a call and shoot me an email. We can get into more detail. The other thing that I think is worth mentioning is if you look at refinery capacity utilization, we're actually running at about 89.4, which is versus a year ago this time was around 88.6. So, basically you've got refineries running, good production numbers here, in my opinion, and with that capacity utilization running higher than what it normally would be for this time of year, and yet we're still seeing builds in the crude stockpiles. Again, I think it really helps point to lower crude oil prices over time. So again, give me a call, shoot me an email. We can get into more detail. I've got some strategies that we're looking at. Got a February options ratio put spread. If you're interested, I can get into more detail on that. Numbers on the screen. Give me a call. And of course, remember that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.